gold has been ripping to the upside. It looks really good. It continues to march its way higher. When we look back over the longer term chart of gold here over the past year and a half or so, we've had a series of bull flags where it rallies, takes a breather, rallies, it flags out sideways, takes a breather, and we're back into this next run phase. And I love to use Fibonacci extension. Fibonacci is like one of the most powerful sequences in really like the universe. Everything seems to come down to Fibonacci numbers. And so using it allows us to project forward where price should run to based on its momentum and the past moves. And so if we were to use Fibonacci extension from this low, from this last bull flag, the previous bull flag, to the previous high that we saw, and then right down here, this, if we carry it forward, will bring us to where we should see gold run to. And this price tag is about the 3,050, 3,055 in that range to the upside. So while it's not a huge move, gold still has potential to run 3 or 4% before it hits that next big plateau where it could take a breather for a little bit. And we're in this sweet spot where gold really is kind of in the precious metal space, it's really the only one, in my opinion, that should be really focused on, because we're in a time in the markets, and I think the economy around the world, really all the economies, where there's a lot of uncertainty. There's a lot of things going on. We've got war and currency swings that the whole world's buying into gold. And that's why gold keeps hitting new all-time highs, and silver is nowhere near it. Miners aren't anywhere near it. And it really is kind of a boring, slow asset, but it's consistent, it's moving up, and you can take advantage of it with leverage. A lot of people don't like gold. They're like, no, get me into miners because there's way more potential. I'm like, well, you have a better chance of making money with gold in this current market environment going up. And then you just apply leverage, buy a 2x gold ETF, buy some options on it. It gives you like a high probability trade, and you can get the juice like a miner. So that's what I see in gold. It has a little bit of upside left, and I think it could still go higher after that, but I think it's going to hold its value very well over the next several months, as I think this year is going to be a big turmoil year for equities and real estate and a lot of stuff. Obviously, Trump has shaken things up. I just saw this morning he removed military support for Canada until we become the 53rd state or whatever it is. It's crazy, man. These politicians, not just Trump. I mean, all politicians. I hate politics. I hate politics, period. It's such a joke, all this stuff going on. But anyway.
Yeah. Let me ask you some questions about that. So it looks correct me if I'm wrong, but it looks a little bit parabolic here, if you would. And then and I'm still optimistic to the upside too, but that's a little scary. Should I be scared or afraid? And then what is a good entry points, or would you still look to, that's kind of a double-edged question here. Would you look for a pullback here to get into?
Yeah. So more or less, it just ran up to the 618. I just deleted it, but it just ran to the 618, had some volatility. Typically, we see a little bit of a pause and pullback or a couple of days in there. That's usually an opportunity. If it pauses there, it usually means we're going to hit the 100% measured move. So at this point, I mean, it actually just had, if we zoom in, it's really hard to see here. If I auto scale, if we auto scale, we can see we had a big pullback a couple sessions ago, and that would have been a good opportunity. But now this pullback means it's just kind of reset. And now I think the next run here really is probably going to go up to 3,050. So this is probably a half decent price. But you mentioned, Andy, it looks a little parabolic, which if we go to the monthly chart, and I'll just remove the drawings, it definitely has, when we go back to the last major super cycle that started back in early 2000s, and we use Fibonacci levels from those lows all the way to the highs in 2011, 12, and then the lows here in 2016. If we carry that forward, it is, and I think you and I covered this last time, this huge move where we have this Fibonacci level, when we hit the 618 and we have a pause, that is a really good sign that we're going to go up and hit this 100% measured move, which we have hit. And now we've recalibrated the shorter term chart to say, okay, how much further can we run? And what happens typically once we get into one of these phases, they do tend to go parabolic, and we start to have a blow off move where everyone piles in and it shoots higher through the target. It happened actually back over here. We saw a big spike within a 3-month window. We had it back over here in 2011, where it just has this blow off move and goes parabolic. It's kind of a short term squeeze of everyone piling in at the same time. Everyone's starting to talk about gold, silver, and miners, and they're all piling in. Hence, I do feel like this year we are going to see gold have a fairly significant pullback, a lot like we saw in 2008. It was a 34% pullback. But right now, the trend is up. It is showing higher pricing, and we're in a very favorable market condition that you don't want to be picking a top here. You might as well ride it higher or wait for it to put in a topping pattern and wait for it to kind of reset. So 3% upside isn't huge. So it's not like you're going to miss out on anything spectacular at this point. Um, and I do believe we're kind of getting close to the end of this run in gold. Just, you know, going back to this whole pattern, this is like, 25-year pattern hitting our target. We could actually look at the shorter one from 2016 to this run up here using Fibonacci extension and carry it forward down to this low. It comes to the same level that we've hit in the last couple of months. So there's two sections of this whole pattern that target the same area. So right now, to me, this is like icing on the cake. If you're still in gold, enjoy this, but be ready to lock in profits, because typically after this comes a very sharp pullback and a reset, which is a good thing, because after the reset, we're going to have this. That's when I believe the miners late this year, hopefully, everything resets, and then miners become the best play. Forget gold. It will be blurring and slow. You want to get into gold miners because and silver miners, because they should start running hundreds or thousands of percent. So every asset class and every pocket of that asset will have better times to trade. Right now it's physical gold or the price of gold. Hopefully in a year or so, it'll be all about miners. That's the way I see it.